said he was going to. Yeah. Go home. Like guys for his girls or something, but there was car failure till 6:30, so he's going to stay till 6:30. I sent you a picture at 7:30.
All right, morning everyone. Let's keep going. Okay. Okay, last night's session in the States is a bit of a non-event. We kind of tried to get up a little bit, ended up closing around flatline. I kind of almost think it's a bit of a victory for the bulls in the States, but I'm personally very nervous. Just the way that our market closed yesterday, I know that we did get a big bounce on Wednesday session in the States on Greek news, and I think we held yesterday well, even though that there was the IMF saying that no progress has been made. That being said, it's just it's been there's this it's kind of a funny feeling in the air. There's exceptionally low volatility. I mean, yesterday was one of the most extreme days I can ever remember. That prices were just gapping around 0.5%, 1% on ticks, and there was nothing trading in the middle. There have been a lot of market pundits that have been arguing about the fact that there's not enough liquidity in markets, especially in the bond market, and that because of Dodd-Frank, it was going to create problems if you had a real shift in sentiment, and everybody ran the same direction at once. And I'm starting to get more worried that that's also a bit of a major issue. So, yeah, I mean, the selling yesterday in our local index came in. It was very, very heavy toward the end of the day. It's about the third day in a row, if I'm not mistaken, that it's come in and been exceptionally aggressive. So we actually traded really well pretty much for the entire day. And we lost it all, in a matter of 30 minutes at the end of the session. Basically, a little bit of help from that Greek news, but other than that, I mean, I think a lot of it is just local selling, and we're very quickly approaching that 46,000 level, which I think there's some strikes around for our upcoming closeout date. So we had initial jobless claims yesterday, obviously, that were slightly higher than expectations. Sorry, it says beating expectations. It should be missing expectations for 275,000, and that should also be 275,000. But bottom line is more or less right in line. I think the number is solid. The big number, I think, on the day yesterday, even bigger than jobless claims, was the retail sales figure. And the retail sales figure came in line on the overall number, the advanced number, but the ex-auto number and other numbers were a slight beat. And I think that that just adds a little bit more fuel to the fire in the rate hike camp. The interesting thing is that interest rates actually pulled back a touch on it. So I think the market had really been pricing in the chance of a real big beat. We were trading up around 248 on the 10-year yield yesterday. We're all the way back at 237. So I'm a little bit uncertain as to why it corrected so much. But I think the market was obviously expecting a really good number. All right. Moving on, let's look at Asia overnight. The Hang Seng up. Everything else is pretty much down. I mean, Nikkei's flat, but it's modestly down. I always say down 0.2%. So there's very little going on there. No leadership whatsoever out of Asia. The only leadership that we have seen out of Asia since I can remember has maybe been news out of China. Other than that, we have literally everybody's kind of, it's a tail wagging the dog kind of thing. You've got the U.S. and possibly Germany. U.S. and Europe are really kind of leading everyone around, and I think it's still mostly focused on the States, obviously, as well, especially right now, people trying to figure out when that Fed rate hike's coming, digesting all the data and all the commentary out of the Fed. That is really the entire focus of where the market is at the moment. All right. Chart of interest today is from Charlie Villela, and this is showing the implied expectations for Fed rate hike. It's the shortest now it's been since April 2010. So it's at 5.62 months that they're forecasting a rate hike out, or that it's majority of the people think that a rate hike's coming within that time. So really the consensus right now is looking at a December rate hike. that's this year. A lot of people are still arguing for next year. I think right now, especially the way the last few pieces of data have turned. Yesterday, you had the Atlanta Fed, who really called the first quarter GDP disappointment. They came out with their expectations for next quarter, and also an upward revision for the first quarter. And they've been really hot. I mean, everybody's looking at what they're putting out, all the data, and that sort of research that they've been putting out as being some of the best in the world at the moment. And so they came out with that yesterday, saying that we're going to grow around 2% second quarter GDP in the States, and that we're going to get an upward revision in the first quarter. If all these things start to happen, they keep happening. We've got growth in we've got growth in wages in the States. Jobless rate is down around multi-year lows. There's no reason why they can't really lift rates, I don't think. So the Fed's starting to run out of arguing points against it. All right. Corporate action over the weekend. We've got MMGs, MDCs, MPCs, NTCs, RLOs, and TONs all going ex-div over the weekend. So not any real biggies there. Maybe Mr. Price is a decent size. So they're X today because of the holiday on Tuesday, I guess. Anyway, so pay attention to these on the open. Sorry, I forgot these are X today and not over the weekend. All right, market data going on today. We had Japanese industrial production better than expected. Tertiary industry index slight miss. We have PPI, final demand in the States, and the University of Michigan sentiment numbers. Nothing really big to pay attention to in data terms today. We're going to be watching for the action, see how that goes. All right, let's get into the maps. I don't have that much to really show you today, simply because even though that we did see some movements yesterday in the market, just not that much that's compelling that's opening up. I think we're at a real precipice at the moment, so I think you just got to be careful out there unless there's something really convincing you want to stay out. Brait, you can see Brait here really breaking out beautifully out of an inverse head and shoulder, out of a bull flag pattern. We came down, we didn't quite get to $100. And we definitely didn't get all the way down here to 95 to test support. I would love to see a pullback to 95. Either way, we're breaking out of a bull flag there, targeting higher levels. Same sort of chart in Barlow's, except for maybe a day before. So zoom in a little bit, and you can see same sort of thing, breaking out of a bull flag pattern. We really had been trending up. Sorry, I just speed that up. We really had been trending up nicely over the past 3 months or so, which has been a new thing for this stock. It hasn't been trading well for a long time until that period. Nice correction down from about 105 down to 95, and breaking out of that flag. Still looking like there's some meat on the bone. Maybe take out recent highs. Kumba. This is actually a great setup here, almost an inverse head and shoulder. If it breaks through 180, it's an ugly head and shoulder, but I think the level either way is there, so you can see quite a weak little left shoulder. But the fact of the matter is, the waves are there, and breaking through 180 would open up a massive target to the upside, maybe giving us a chance to come up and test the 200-day moving average, please, so that we can reshort this thing. So anyway, just keep an eye on that. If we get above 180, this thing definitely can make a break to the upside. I would target 210 as short-term resistance there. And then Steinhoff. So Steinhoff, you can see, has really been consolidating here. Between 73 and more or less 72. And it's been 6 days now that we've had that consolidation in that area. This is starting to get more decisive here. Just watch this one. I think if we get above 73, this thing can actually make a bit of a pop. I would target maybe 74.50 if we get above 73. As you can see there, 73 pretty well defined. But if this thing can stay below 72 and actually give us a close below 72, then I think it gets a little bit worrying. So just watch this one closely. And a lot of people are in this stock. I think if the market hangs in, obviously it'll probably do well. But if we do get further bleeding, you're going to end up getting guys get stopped out, in my opinion. So just be careful in this. That's it for today, guys. Good luck out there.